Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. The question on our minds here is, I guess, can we close green for the week? It was looking okay up until this morning. We'll talk about that. And again, just how to approach volatility in these markets. We do have a jobs number that's going to be really important this morning. It may be the last good piece of economic news potentially for a while here. So we'll be watching that at 8:30 here. We have some individual movers on our radar, but it's mostly going to be just about the continued volatility in this market. Jamie Dimon is, of course, we wish him the best. He had emergency surgery, so we wish him the best this morning. Joel, what's the word here overnight?
Down 89 handles, 29.27. Little pop off that 6 p.m. open, took out that double bottom at 29.75-ish. And here we are, folks, 29.15 at your pre-market low. Spencer mentioned a good number. Monday's closed 29.42. I'm sure a lot of people would like to see that. The low for Monday, we got to talk about Monday's low at 28.89 1/4. And then below that, I'm not even going to give you a number underneath that. The low of the move, last Friday's low, 28.53 1/4. And I don't want to look under that right now. So we'll see what happens with that. Crude in the red by $2.43 at 43.57. Gold, I'm finally up on my gold trade. Bought that at the top. At least it's making a new top. Up $20 at 16.88 even. Silver in the green by 8.7 cents at 17.48. Bitcoin flat on the session, 9,195. Triple D, my question for you is, are you canceling your penny bids in the market?
Get those stub quotes out of there. They might get executed. No, I'll stay out there at a penny.
Okay.
I'll keep my penny bids up there.
All
It's
right.
ugly, man. It's ugly.
Don't forget to turn your clock back on this weekend. Spring.
Oh, nice.
Yeah.
Is that this weekend?
Yes, it is.
Already?
Yep.
Actually, it goes forward.
Spring
Joel,
forward.
You'd be 2 hours out if we were following you.
Yeah, spring forward, fall back.
Yeah, you got to think
You're
spring
right.
forward, fall back. So we lose an hour of sleep. That's okay though. I actually don't mind that because it means my kids get up an hour later. Because when it goes, the fall messes us up because they think they don't respect daylight savings time. So when you turn back the clock, they actually, I say no, it's 6 o'clock. They say no, it's 7 o'clock, and I'm getting up. So actually, when you have kids, you actually like that the clocks go forward.
No, it.
So
what do you want?
What do you want to talk about? I mean, where do we want to start here? Let's start with the overall market.
I mean, it's Friday. It's Friday.
Should we just not talk markets today? Should we just
potato?
lighten up the mood and just let's talk sports? Well, my team lost last night. Oilers lost last night, so that's not good news. What do you want to talk?
I mean, I think
let's forget about the markets for 1 minute. For 1 minute of sanity here, because I'm going insane with these markets all the time. So give me 1 minute of sanity. Talk about something non-market related.
Okay. You under the bus. All right. Then I will mention that everyone get May 15th on your calendars because that's the confirmed date for the Benzinga Trading Summit, the next one. So we last had a trading summit in November. May 15th is our upcoming trading summit. Again, in New York City. You can go to benzingaevents.com to learn more about that. And that's what we just talked about for a minute. So nice little plug for Benzinga events. There we go.
Nice. What are your okay, let's bring it back to the markets. I continue to sell stock. Like I said, I sold more stock yesterday again. I bought that Teladoc. It's the only stock that I did buy, TDOC. We talked about it on the show. I forget who was that gave us that stock that wanted a mention of it. And I looked and I was like, this is a nice setup because this could actually be the coronavirus play. I liked the setup. I bought it yesterday. I was a little late to the party. I got in at 126. It's 137 here this morning, so it's looking like a good buy. I mean, Zoom and Teladoc, Zoom, we talked about these in the show, and they were both, we even set up trades for you saying, I'd stop out if I was long below the 97 on the Zoom, and the TDOC, I gave you the stop out right below the recent low, that 119. So both of these stocks, I didn't buy the Zoom, but I did buy the Teladoc. Both of these stocks are looking good in this coronavirus environment here. What are your thoughts here on these two stocks technically, Joel? Let's start with good news, because these are two of the only stocks besides gold stocks that are trading higher.
Boom, boom. Well, let's see. We are trade. Let me adjust to my pre-market chart. I mean, it's hard to. Are you talking swings on these, Dennis, or are you talking
swing trades?
Swing trades.
Yeah.
Well, you certainly got the momentum going in your direction. Let me go to the pre-market chart. I'll just give you some levels.
I have two swings on right now. It is long Lake and is long Teladoc. Those are my only two swing trades on right now. Well, besides the puts that I own, but those are my only two bullish swing trades, let's say. Even though they're kind of bearish trades in disguise because they seem to go up when the market goes down.
I like 130 here. You want to see some continuation through 130. Yesterday's high, 129.83. Your pre-market high.
What is this now? Costco? Or
Teladoc.
TDOC? Okay.
Teladoc.
I don't know why I thought it doesn't. Yeah.
Yep. So there you have some confluence in the levels from the pre-market trading and from yesterday's trading. I'm not, it's a NASDAQ stock here. So someone's targeting 130 here. So I think from a swing trade perspective, I'd like to see it, follow through 130, boom, get above 130, greener skies ahead. I have a feeling if it doesn't get to that 130 early.
It's at 137 now.
137? Zoom?
No.
Holy, okay. We're talking ZM. We're talking two different stocks, and they're both close to price. So
I'm confused.
Sorry.
Okay. Zoom.
Costco was never mentioned. So let's start over here.
Okay. We're starting over.
Give us some levels on Zoom. Zoom, obviously. So just to recap, got hit on the earnings yesterday on the show. I'm like, this is the coronavirus play, the probably buy back. They did not even hesitate. They bought it back so fast. And Kramer pumped it on CNBC too, which didn't hurt. Saying that they were talking, they were on the conference call that he didn't want to say they were killing it because of the virus, but he said they're killing it. Zoom is what Kramer said, and that started really the rally when it was at 108 on CNBC at 9 o'clock, and it just kept continuing on all the way up. Gets up to kiss that 130 level here, like Joel's saying, it gets above 130, it's wide open because that's all-time highs.
Right. So there, we're done with that. We're done talking about.
Go Teladoc, TDOC, because I'm long this stock as a swing trade right now, only because of the coronavirus play. So valuation, I know, is extreme. I'm not saying stick this in your long-term portfolio and forget about it, but just like LAKE was earlier, I think there's going to be a lot of people thinking, I kind of like the idea of getting my doctor over the internet, not going into a dirty doctor's office. That's a logic trade.
Okay, logic rules here.
And technicals a bit too, because I didn't mind the technical setup.
It was
like all the ducks were in a row on that one. We had technicals, got some logic, got some fear. I'm up 10 points on it and 7% on it in one day. A lot of times I would ring the register on something like that, but because this market's crazy and this is a stock I think could get some flows, I think we challenge the highs.
Today or
today? I think we challenge 148 today.
Okay, well,
I'm talking my book, but I think we challenge 148 today.
I think you got to get through yesterday's high first at 138.07.
Sure.
136.49. So there, if you get to that level, then things really open up to that 145, 148. I just think, though, that since you had that precipitous fall from 148 to 119.37, you might see some offers out there ahead of it, because you've had a steep decline after a big run up. Some people have been caught in in this or whatever. So I don't think, I'm not up for making any kind of bets today, but I think that's
You think people are caught in this?
There's some people caught long that bought it on a couple days. They bought it on the
148.
Yes.
So
yeah. I
just didn't trade up there very long. I think this is just a coronavirus stock, and I think people are just like, where's the coronavirus? Oh, this is a coronavirus stock. I think that's the way the market is thinking right now.
Sure.
I think it could see panic buying and something like this, which is absolutely stupid, but that's what this market is right now. It's crazy. It's headline driven, That's why I bought the thing yesterday, was just because this is a stock that could actually get media attention. If it starts going up, they'll start talking about it on CNBC and saying, hey, look, teledoc, doctor, and everybody thinks, hey, that's a good idea. So that's why I'm long it.
I say medium over, not even medium. I'd say like on a scale of 0 to 100, I'd put the oversupply factor at like 20%. Just because of what happened the last couple,
I think up near those highs, you got some resistance on
All right,
147,
look, why not?
148.
What the hell? I mean, we could do, but you'd want a lot of odds on this, so we did.
I'm already long it, so I don't need to make a bet on it. My cash is in it.
I don't think
I'm playing with real money in this guy. Let's move on to the overall market. We continue to leak here. We're now down, another 1,000 points in the Dow? Back-to-back 1,000-point Dow days going on here?
Yes, sir.
Were we down 1,000 yesterday? Or we didn't quite get the 1,000. I don't follow the Dow. I only follow the S&Ps.
Yeah, I don't.
None of us follow the Dow, so we don't know.
Okay. Anyways, it was ugly.
So
it continues to be ugly. I don't know what to say. I mean, we've said everything on this show. We have warned on this show for a month. Everybody thought I was crazy. I started thinking I was crazy when we started rallying mid-February. I was like, I guess I'm wrong. The market punished even the people who were right on this call by rallying the market for 2 and 3 weeks before it, just to shake people out of their shorts. I had some long-term puts. It's the only reason I actually able to hold on, because they were long enough. Like I said, some of them expired worthless. But it's amazing how this market, held up for as long as it did. I mean, it was amazing. And we got to talk the airline stocks. It was amazing that these airline stocks held up as long as they did. It was amazing that these cruise lines held up as long as they did. Nobody was reading it. I mean, it was unbelievable when you think about it. Like NCLH was $53, $55 a month ago. And everybody's thinking it's just going to be okay. And CCL, which had the cruise line at this time quarantined, was trading up there at $50 or at $44, $43. And everybody's just saying, yeah, it's going to be okay. You know what? These things are really beat up, and this is ground zero. And like I was saying yesterday on the show, don't kid yourself. There's lawsuits coming at these companies now too, going to be coming eventually for people dying on these ships. They are far from out of the woods. Even if we get rid of coronavirus today, there's class action suits coming at Carnival. I'm going to call it right now. There's people that died, and the way they handled it wasn't well. Do I want to be long a stock like that? I said it yesterday was $32, $27 now. I don't want to be long these stocks. I don't know where the bottom is. They are going to have a wicked bounce. I mean, they're oversold, way oversold. Some stuff is way oversold. So some of these things are going to have wicked bounces here eventually, but I think those bounces are going to be sold. Airlines too. I mean, you're talking about UAL. You put this in perspective. You're talking about giving up 3 years of gains in a month. They're way oversold, but there's nobody flying. So what does that mean? I mean, we've never seen that before. Like, air traffic is down so much. They're trying to, whatever they can do. These airplanes are going empty. They're cutting 20% of their flights. I don't know. We have there's nothing to like come in here and say, okay, this is the bottom. We don't have anything to look back on in history to say the last time UAL got rid of 20% of their flights and half of them were flying empty, what happened to the stock? Has that ever happened?
And that's the scary thing, is that there really isn't a precedent. We have a precedent for almost everything. There's a precedent,
and we don't for this.
There's a precedent for a near economic collapse, but there's no precedent for a widespread contagion in the U.S. So that's the scary thing.
I mean, SARS, and people keep comparing this to the normal flu, and I saw it again last night on my Twitter. I see, why does the market down so much? It's got to be a buying opportunity because this is just the flu. Say it again. We'll say it again. Here's the ugly math for you. If you think this is spreading, and it's spreading, and all of us, if those Harvard analysis come up and 40 to 50% of eventually people get this, or heaven forbid, even more people get this, and the death rate's 3%, you can quickly do the math and say you can see between 5 and 10 million people in the US die from this. That's much more than the 60,000 people that died from the seasonal flu last year. When you do the ugly math on this, when it's got the death rate 30 times higher than the normal seasonal flu, that's what the market is selling off for. So don't tell me that the market is unjustified here. We've been calling it on this show because the numbers never made sense that the market was holding up as well as it was. Maybe the death rate's going to end up being only 1%. That's still 10 times worse than the seasonal flu, which is 0.1%. It's not 1%. People are saying, oh, the flu kills 1%. No, go to your CDC website and do the math. It's 0.1%. So if it's 1% on COVID, it means it's 10 times more deadly than normal flu. If it's a 3.4 that the World Health Organization, some pretty smart people at the World Health Organization are saying it is right now, that's 30 times more deadly than the normal flu. There is justification for the sell-off. I'm not saying it's going to kill everyone, but if it killed 1% to 2%, it would be an epic disaster and the markets would be significantly lower. So we got to hope, one, it gets contained, two, the death rate is not as high. I'm hoping the death rate's going to be under 1%. Like they said, there's cases, people walking around with it, which is affecting the math, but at the same time, there could be people dying with this that are getting diagnosed as dying with the seasonal flu and they were dying with COVID. So there's a lot of unknowns here. Market doesn't like unknowns. It's why we're down 2,000 points in 24 hours.
And the news this morning about some people that were on the cruise ship awaiting test results is not a good feeling. I believe I saw 1,000 people are awaiting test results.
Well, did you see that nurse? Did you see? And let's call out the CDC right now. Did you see that nurse video? I tweeted it out. I retweeted if you go to my Twitter timeline, Triple D Trader. But was treating a patient, and I don't know where she's from, but she was treating a COVID patient. She is now sick. She has COVID symptoms. She is awaiting a test, and the CDC first refused to test her. The nurse that is treating the COVID patient now has COVID symptoms, and they're refusing to test her because at first they told her that she wasn't wearing her mask correctly, and if she was, she wouldn't have COVID.
Yep.
Is that a reason to not test somebody? What is going on? CDC, get your act together. Test these people. It's not just about her health. It's about our health. Start testing people.
Yeah, I think that's sort of what's weighing on everything here is all the numbers.
Incompetence is weighing on it all, Spencer.
Right, but all the numbers like could be way off. We don't know because we don't have the ability to test as many people as we would love.
It's a joke.
So
this has been going on for 2 months. What was the CDC doing? What were they doing? Just watching and twiddling their thumbs, thinking it's not going to come here? And they don't have the tests? Get the tests. Everybody should get tested.
Companies that do have the tests have both been dropped in the chat today: Quest Diagnostics and LabCorp. So maybe we can pull those up here. But yeah, it's you have to wonder what they were doing for 2 months there. I'm not quite sure myself. But
it's nuts. Like, it's nuts. And you think about everything that we talk about on this show. And I have no idea if these are the people that are going to protect. And it's not just CDC. Canada's dropped the ball on this too. It's North America altogether. Canada's not testing anybody either. And then did you see with the person that came back from Italy? She comes back and they don't even question her. They don't even say, where you were or anything. The reporter that comes back from Epicenter,
right,
they let her come right in the country. Just come right in. Welcome. Yep. So, we are banning China. China's not even the problem now. China is not the problem now. The problem is everywhere. It's everywhere. And this is scary. Now, like I said, the markets are going to rally. The markets are going to go down. We're going to keep seeing whipsaws. But every time we rally 1,000 points, I sell more stocks. And that's why until we see a vaccine coming and we start seeing the caseloads, and we're going to see them go a lot higher once they start testing. But that's the news flow here is just potentially so negative. The only way out is really the vaccine. That's like the positivity, because the Fed cuts 50 basis points. They didn't care. Fed's going to do another emergency cut probably. We'll rally a little bit on it. But this isn't a financial problem. This is a health problem. We need more testing. We need to get the vaccine cooking. And once they get the vaccine, and there's hopes of that, that's what's going to bring the markets back up. But we're a long ways away from there. So it's very, very scary situation, not only for investors, but for the people. You got to get the tests.
Joel? Okay, Joel has nothing to add to that.
Do you think it's right, Joel? That the CDC?
No. We're totally.
They dropped the ball.
Why are we unprepared though?
That's what the question. I don't understand it. I cannot fathom.
Do you want to know?
Why?
Because we've been cutting our healthcare budget and our healthcare allocation.
That's definitely part of it.
That's scary too. That's a
definitely
scary
part of
thought.
it.
Yeah, let's call an ace, an ace here,
right.
A spade a spade. I mean, you have no way to foresee this kind of event here, but
Right, but
when you have no one
a-
working in the government working on things like
a
this.
number of high-ranking officials were let go a couple years ago, and their jobs were not filled, and so you have the chain of command a little sparse at the moment for this
That's
sort of,
scary too.
which has definitely been you can say it has not been a contributing factor. So it I mean the only thing you can hope for is we said that it's just we got to hope for just more tests and then see where that gets us. That's
Like
all.
we could have did it so different. Like, they got the Comic-Con going on in Seattle right now. That there's 100,000 people going there. Why are they doing that? This is like, and Scott Gottlieb, fantastic, analysis he gives on CNBC every single night. If you're not following him, you should be following him. And what, he's worried about this Seattle thing that's happening. Is it this weekend, the Comic-Con? Is it this weekend in Seattle?
I don't know. But wasn't it? I thought I read it was canceled. No, it wasn't.
Did they cancel it? Because they weren't canceling it yesterday because Scott Gottlieb was saying they should be canceling it. Did they get it canceled here overnight?
I guess not, but they're offering.
I hope they did. I mean, that's what Scott Gottlieb was pushing through. But you're not going to, you send 100,000 people from around America to the epicenter and then they all leave.
Well,
That's
they're all
scary too.
Yeah, so it hasn't been canceled, but
It hasn't been canceled.
No.
It should be canceled. Just reschedule it. What's a big deal? Reschedule. I know people's flights and stuff. Maybe we can.
Well,
I just. Why are you going to have a conference? Like, that's like, envision. And Scott Gottlieb is saying Seattle right now is kind of like our Wuhan. I was reading last night a person from Seattle, and they were saying that it's really ugly there, that the grocery stores are bare. I'm not sure. I'm not in Seattle, but this was a person on Twitter was saying that don't believe what you're seeing in the media. It is ugly here. People are scared to go out of their house. And there's actually like the grocery stores shelves are empty. I mean, that's a scary thought. I don't know if any of that is true, but that was somebody from Seattle was tweeting that. So we hope that's not true. But again, if you're in Seattle right now and they got all these cases happening, you'd probably be scared. I wouldn't want. I'm scared, and I'm on the other side of the world. I'm in another country.
I just found out that Scott Gottlieb is from my hometown, so I'm gonna send him an email today.
There you go. So we're gonna get him on the show.
And there's my in. We're from the same town, and I'll ask him if he wants to come on the show next week. Let's get to some. I know it's hard, but I do want to get to some stocks.
Yeah, sure. Let's go.
I've been writing down as many as have come into the chat. So
let's do it.
So let's just start with DGX and LH here, Quest Diagnostics and LabCorp, because they are both related to this issue of testing.
And both stocks doing very well. Again, these are short-term coronavirus plays. So obviously DGX trading up here again this morning. Anything that says coronavirus right now is going higher. I mean, NNVC, we've talked about this one on the show before. There was some small caps penny stock letter that I released, I must have released a buy rating on it or something saying about their, potential drug or whatever it is. And the thing rips 50%. I mean, it wasn't even a press release from the company. You guys confirmed that. Benzinga confirmed that last night. So it's anything that's got that COVID or coronavirus thing. They say that it just gets immediately, that stuff's hot.
This is 2017 blockchain, Bitcoin all over again, right? Anything that says
yeah, you rate your news filter and anything that says anything to do with COVID, anything to do with coronavirus, those stocks rip.
Yep. Don't, not necessarily having to be long them, but, don't be short them. And no, that's just, it's hard to, these plays, you never know what news. The news got us into this, and the news is going to take us out of this.
It is.
If and when. So
it is. And don't kid, this isn't the end of the world. I mean, you put it in perspective. If it, in a worst case scenario, like in a very worst case scenario that it really spreads, you could be talking as many as 5 million people. It means a lot of people live in the US. And, but again, and what does that mean? With the fear that we're going to go through here in the next little while, as it does continue to spread, is what is going to continue to drive the market. The market driver is being driven on fear. And I just don't see the fear going away tomorrow. So that's why, I think there's going to eventually the restaurants, you look at restaurant stocks, they're getting whacked right now. And why? It makes a lot of sense. I mean, people are going to go out to eat less right now because they're scared. And that's this market right now. This market's being driven on fear. Until we can see a reason for that fear to go away, it's hard to come in here and say this is the bottom. I think we're going to retest the lows. I hope they hold. We haven't even tested the low, 285. We've held up fairly well in the overall market. Obviously airlines, casinos, all that have been killed, but we've held up pretty well in the overall market.
S&P futures, we're going to a jobs number here.
Yeah, it's going to be big.
Yeah, in a couple minutes.
Or
here.
is it, Spencer? Predict. Is it going to be a big, or is it going to be crickets that the market just doesn't care about anything?
I think it's important. I think there's a chance this could be the last real bit of good news on the economic front for a while. And it's expected to be here. I'll give you the numbers. Non-farm payrolls are looking for 175,000. 225,000 was the previous figure. Unemployment 3.5%. So those numbers seem attainable, and I feel like if we even if we blow them away, it wouldn't say a lot, because these don't account for the last few weeks or so. But I think it's significant only because this could be the last good news we get for a while on the economic. And you have James Bullard saying this morning that he's not seeing businesses laying off employees, which you want to hear, of course. That's a good thing. But
Plus they're airlines.
My sarcastic remark is they're just firing them. They're not letting them off. They're just letting them go.
Well,
but,
we're still early from an economic perspective. Like, you're not seeing, an immediate, like, people think this is gonna, if you're running a restaurant right now, we're down right now, we'll come back next week. I don't think it's come back. I think this is going to be the entire quarter, probably into the second quarter substantially before we're kind of getting out of the woods on this in either direction. The warm weather should hopefully help. I mean, we're hoping that helps, even though obviously we're seeing cases in the Caribbean now, but maybe that's people that flew down there and got there. But we are seeing a little bit of spread in warmer climates. But again, maybe the warmer weather starts to help us with this too. 2 months, but we got 2 months of still pretty scary.
All right, Dennis, 8:28, 45 seconds, folks.
I'm going to trade this number. I'm gonna let you guys do some ticker talk here for a few minutes. Sean's gonna be coming on 8:35. Yes. Whatever you want to talk about, I'm going to go trade this jobs number and see what happens.
Go wide, baby. Go wide.
Go wide. The HFTs are going wide.
You go just inside them.
All right. So I'll repeat the numbers here. Non-farm payrolls, the estimate is 175,000. Private payrolls estimate is 155,000. Unemployment rate estimate 3.6%. Wage growth or average hourly earnings staying constant at 0.3%. So
I smell a rally.
175,000 and 3.6%. Those are our big numbers here that we're looking for as we are within a minute of the.
I bet you we go up and down on this number.
Okay,
I'm 100% sure.
Great. Up or down, or up and down?
Both.
Okay.
29.15 is your pre-market low. We're 15 seconds away from the jobs number. Interest rates, we know where interest rates are. They're not going up anytime soon. Let's see if we get a super pop here. A super pop. Well, first of all, your close on Monday was 29.42. Let's see if we can sniff that. And then, old support, new resistance, 29.76.
Whoa, big beat on the jobs number. 273,000 non-farm payroll added last month. Unemployment 3.5%. So a big beat on that non-farm.
Keep going, baby.
Yeah, 273,000. Excuse me. Non-farm payrolls versus the 175,000 estimate. So a huge beat on the number. Unemployment rate is at 3.5%. If I got that right, yeah, 3.5%. And so, wow, big beat.
Big beat. Let's see here. I'll drill down here. Still looking on my 15-minute chart here because we just started.
That was quite a spike we got there.
We did get a spike. But,
holy moly.
Yeah, I mean, not really, overall perspective, the way we're down is not that big yet. But
I think he was being sarcastic.
Yeah.
Well, I just saw the wick on my.
Yeah, he saw it. Dennis, you're not back, are you?
That wick is not real. We didn't even move. We literally did not even move. For what this environment, we moved 4 points.
Yeah, we're
still trying to digest it here. We're still moving a little bit, but that was crickets of all crickets right there. For as much volatility as we've had, they don't care about the jobs number right now. This market is being driven right now by COVID. And they're saying we don't care about a backward-looking jobs number because that's not
nothing. That means
that's nothing of what's coming. So unbelievably no movement at all. I was hoping for a pop. I wanted to sell the pop. I was ready to sell the pop. Didn't get it. I mean, we're up 4 points. So I guess you could say we popped a little bit, but
yeah,
when you're talking, you're down 90 points and you rally 5.
hit 200 since.
That feels like a waste of time.
Can't even sometimes get my stop in before I'm down 4 points in some of these trades. So, boom, boom, boom. 29.33 has been the high so far, the rebound. So let's keep an eye on the high of the rebound. Also, I mean, how great would it be if the market could, let's see, what was Monday's close? Monday's close was 29.51. 29.51. Oh, no, that was Friday's close. The Monday's close was 30.65. We're nowhere near Monday's close. Forget about that. 30.65. I was referring to Friday's close.
Crickets.
29.51. I'm sorry, Triple D. I'm hoping it was going to be a little bit more.
I wanted some action. I thought I was going to get some action there.
Yeah,
there's hoping for action.
There's too many people.
There's enough action anyways. It's all good. We got enough action. We don't need more action right now. The VIX is at 47.
Yeah,
we have action. We are long action.
Yeah, this is pretty much old information. I tell you right now, the next jobs number will be the one that many people will be looking for.
The next 3 or 4 job numbers could be.
Yeah,
really,
I mean that's
really
another
important.
thing too, and we talked about that with Mark, and we talked about that with some other people. Like what is like Q2? I mean Q2's toast, right? Q3.
I would think so.
Is still in the in the toaster, is not burnt yet. Q4, we're cooking.
We might be through it. We might be getting through it.
We're cooking on like really, Santa Claus rally or something. Maybe we're turning the temperature real down. Maybe put it like crock pot and just cook real slowly and see what happens. Q4, we are rallying. There's no doubt we're rallying here, Dennis. It's
we're up 5.
Methodical rally. So we are. So it's 8:33.
If you look at that tick chart on CNBC right now, it looks like we ripped higher. But then you look at the numbers on the side. This is why you don't use tick charts.
I can tell you one thing.
Don't use it. This is my technical analysis. Page 6, my technical analysis book is going to say don't use tick charts.
You want to hear a big mistake I made yesterday?
What'd you do?
I was like, I try not to look at anything less than a 15-minute, during the day.
Yeah.
And I was in a position like, I'm going to go to the 5-minute. Okay. I based a decision on the 5-minute chart. And it was like the stupidest move ever. It was like, why did I do that? Like, why, if anything, man, widen out your time frames. Dennis, you talk about this a lot of time on the show. The longer you go out, well, yeah, the more chance you have to be wrong, but the more chance you have to be right. So, man, and I just knew it. I'm actually going to call TradeStation and have them disable all time frames on my charts, anything less than 15 minutes. It was ridiculous. But where's Sean? Is Sean
Bring
around?
Sean in.
Sean.
We need some positivity. And Sean, I heard, is bullish. I heard Sean's bullish. So we need a bull. We got a lot of bears, at least one big bear here.
Oh, that's Sean.
Testing.
Yep. There he is.
Here, Sean.
Good morning, Benzinga.
Look at the positivity.
Oh, yeah.
We need the positivity right now.
You know what I'm going to
say? Even rallying. The market just rallied 3 points because Sean just came on the show.
You know what I'm going to say? I'm sick of all this namby-pamby, whiny, crying. I can't go to Costco and find no toilet paper. And this is not a racist comment. All the Asian people are taking all the bottled water before I can get it. By the way, I witnessed that firsthand the other day. I literally tapped a guy on the shoulder and I said, hey, so everybody knows I live in Scottsdale, right? So you pretty much can't exist here. Oh, sorry, the picture wasn't coming. You pretty much can't exist here without water filtration systems because the tap water just doesn't taste very good, right? It's like desert tap water. And I tapped the guy on the shoulder. I'm like, hey, just out of curiosity, why do you have that? Why do you have 4 cases of water? And he kind of said some weird incoherent thing. Nothing really made sense. I'm like, well, don't you have a water filtration system? And he was like, yeah. I'm like, well, do you think coronavirus is going to come through the water filtration system? And he didn't really have an answer. And then I said, do you think the bottled water is any safer than filtered water? Anyway, the bottom line, if you keep your head while everybody else is losing theirs, You can make a ton of money. You know, and by the way, Dennis, I am a little bit bullish, but like I wouldn't buy hold on. I wouldn't buy an airline stock. I wouldn't buy a cruise ship stock.
No.
I wouldn't buy a restaurant stock. In fact, the thing I regret most this week, or really mid last week, by the time I decided to short Chipotle, it was already down $80 that day or something like that. Still might have worked, might have caught 30 points in it. But yeah, no, I mean, I was buying last Thursday and Friday, a little bit maybe the day before. I haven't really bought a whole lot last week. My note to my subs yesterday, the main thrust was, you know, instead of buying a lot more stuff, I'd rather just kind of keep what I have. I just heard the tail end of what you guys were saying. Joel was saying something about a 5-minute chart. And I agree. Like, so in other words, I might take an entry. By the way, 5-minute charts, that's the shortest time frame I'll use. I agree that I tend to like 15-minute charts and longer. In fact, I like the 30-minute myself. That's my favorite short-term charting setup is 30-minute personally. But anyway, so I took some entries and things, and now I'm like, look, if I can just hang on to what I bought until we get the turn that sticks. I mean, you know, I could go from being up 5-7%, which by the way, still in most of my longs, I'm up anywhere from 5 to 10%. A couple I'm down on, the new ones. And then the bottom line is, but if I can wait till the rally sticks, there's things that are going to pop 20%. So, and they might pop 20% in 2 days. So anyway, that's kind of how I'm looking. I'm not thinking I'm going to buy a lot of stuff today. I'm not kind of thinking I'm going to hang on to the inventory I acquired, you know, in the prior week. That's kind of my short and skinny on kind of my market view.
You're long right now. You're playing it from the long side. Like, what if you had to call the markets from here? Where do you think we are a month from now?
Boy, a month from now, I'd be pretty.
2 weeks from now.
Yes, 1 to 2 weeks is tougher. A month from now, I'd probably say, I'd probably put like 80% odds that we could be notably higher.
I hope you're right.
A week. It's hard because here's the thing. I'll be 100% frank. I was more bullish last Friday than this Friday. In fact, I tweeted on public Twitter that I said something like, I wouldn't be surprised if the market closed green today. And the morning looked about like this morning did. If I'm not mistaken, I think NASDAQ closed up a point last Friday. So it was a huge turn. I'm not necessarily feeling that way today, but at the same time, I'm just sort of like, if I could take it all and boil it down into one thing, what is the selling because of? Is it because of Corona, or is it because of we're popping a bubble? So my personal view, and you guys know this, is that the reason I had so much cash up till 3 or 4 weeks ago is because we're in a bubble market. So, and by the way, I'm going to say, I think we're still in a bubble market, but we're in a bubble market. Things were excessively, crazily valued. You had space, you had Tesla. There was a bunch of weird stocks going up a lot, but it was more, again, the stuff I've harped on: cloud bubble, Microsoft, Apple at 330, whatever the high was. And people were still buying that stuff. Literally 3 weeks ago, people were still buying that stuff.
2 weeks ago. 2 weeks ago.
And patting themselves on the back for buying stuff at highs. So I kind of think this is more the come to Jesus of all the momentum chasers literally being stopped and then stopped and then stopped and margin called and margin called and margin called again. So, there you go.
I mean, I agree with your analysis here. I think it was COVID that popped the bubble. So
sure. Any excuse, Dennis, any excuse would have been enough. Anyway, go on with what you're saying.
But the COVID is a serious excuse. I mean, you can't get a better excuse than people now worried about leaving their homes. Are you scared to go outside? You got a mask? What are you doing there, Sean?
No way in hell, man. First of all,
would you fly on a plane right now?
Yeah, I would.
I just did a week and a half ago. I wish I didn't though.
Here's one again. I don't think I would take a cruise, right? Like what's the best? Is Viking the best? Like, what's the super high end cruise line? That'd probably be the one. So if they called me or sent me an email and said, hey, a $7,500 cruise, you can take it in 2 weeks for $1,500, I might get on that cruise ship. but I'm a value buyer. So like the price would have to be exceptionally good for me to get on a cruise ship. But yeah, I don't think I'd have an issue with flying. Here's the thing. Now, I'm not making fun of anybody who makes fun of the other people who say this is just a flu. But in my view this is way more like a flu than Ebola. That's for damn sure. I also think
it's transmitting like a flu.
It
is a flu. It's just a very deadly flu.
And well, we'll see. I mean, the mortality rate, I think, is massively overstated. I think anybody that's putting a 2 to 3% mortality rate on this is massively overstating the mortality rate.
I'm putting a 2 to 3% mortality rate on it, and I'm taking it from who? World Health Organization, I think, is a lot smarter than I am, and they're saying it's 3.4. They said yesterday. So I'm not a doctor, but I'm going to say the World Health Organization probably knows a little bit about what they're talking about. So
yeah, but there's the only area I'm seeing 3% is China, and Korea is like 0.4 to 0.6. So
yeah, but you got to stop for a second. What Korea's done there in South Korea, they've done a massive, great job at, first of all, getting this thing contained, testing everyone very quickly. I mean, this is where we've dropped the ball in the US. I had a huge rant on this about 20 minutes ago because we're not testing anyone. I mean, so if you're testing everyone and catching on day 1, there's a lot better chance of survival than catching somebody on day 10.
Okay. So we may not agree on this fact, but here's the one thing I would say. How many hundreds of thousands of people have coronavirus that are not even sick enough to go to the hospital?
Possible, yes. We hope that's
that's not possible. It could be 1 million people. So here's the problem. You're taking a mortality rate from only the absolute severest cases that have to go get tested. So that's why the mortality rate is massively overstated. I'm not saying you're reading statistics that are published incorrectly.
And here is the other side. And I have heard that argument. And I agree with that argument as well. But you got to take the other side is that people aren't dying on the first day they're diagnosed either. So the way that they've been calculating is they take the current deaths divided by the cases. But
I agree with that. Death rates will rise, yes, over time.
You almost should go back to like, what were the cases 15 days ago and divide it by that? Because people aren't dying on day 1 they're diagnosed. They're dying probably on day 15 or day 20 that they're diagnosed.
We'll see.
Works the other way. So nobody knows. Sean, the bottom line is nobody really knows where this fatality rate is going to come in. It's probably going to be substantially higher than the seasonal flu at 0.1%. I think we can probably safely say that.
I would totally agree with that. Yeah.
So probably if you're throwing it between 1 and 3%, it's probably a ballpark estimate of 1 and 3%. So if you go there and you take, let's say we're ballparking it, and this matters. I mean, people say, what's the matter? It matters because it matters that how many people are going to die. So you take 1 to 3%, and you say if half the population in the U.S. gets it at 350 million, that's 180 million. 1% would be on 180, 18 million. Is that 18 million deaths, or I'm doing that wrong? No, 1.8 million deaths. And on the upper end, you get to 5 to 6, 7 million deaths. Sounds ugly when you start saying, 1 to 3 or 1 to 5 million people in the US could die from this. That sounds a little bit scary. And I think that's why the market is so weak.
I would agree, but I now see like that personal, we'll just have to see. I think that stat would be just so exorbitantly high, but we'll see. Like say, I hope
it's not. I hope like I'm wrong, and I hope this.
But see here, by the way, this is a great example of why people get in trouble, because two pretty smart people can't agree on a stat. Right?
Yeah,
we can't agree on. So therefore, again, this is just a logic statement. If you have two reasonable people who think rationally pretty much 100% of the time, and yet they can't agree.
We'll pat ourselves in the back.
Let's not get overboard here.
Well, but I'm just saying, but they can't agree on something. What happens? That is the environment for the uncertainty that we're seeing. So I think there you go. The fact that you and I can't agree on a mortality rate on this thing, and again, I think that 1 to 3% is like just massively overstating it. But
you think it's less than 1%?
Yeah, I think when it all comes down, it'll probably be 2 to 3 times worse than the flu. That's my best guess.
I hope that's the case. I really hope you're right.
But we'll see. So here's the question: what is the best way to judge? So let's just do. Let's see what things we can agree on. Do we agree that maybe cruise lines and airline stocks might not be bottomed yet?
I don't want to touch them. I've been saying on this show for a month because one, even if you stop the coronavirus now, think about the class action suits that are coming at Carnival. people died on this ship for the way that they handled it. I mean, they kept the people on the ship, and it was, like if you think about it from that perspective, I gotta think there's gonna be some major class action suits coming at Carnival. What does that mean? I mean, it's a scary thought. I mean, I don't know, but how do you value a life?
Yeah, that's going to be a tough thing. I mean, there's just lots of weird. I mean, these kind of things are weird. I'm still going to go back and kind of our intro though, and say, I don't think the magnitude of the selling has much to do with the coronavirus. I think the magnitude of the selling has to do with the fact that markets were excessively to extremely to bubbly overvalued, especially in a small subset of names. Again, let's call it FANG plus. And so here, if you want a bear case, here's the bear case. The stocks that are the most loved and the most expensive have probably gone down less. They've gone down more than the indices, but they've probably gone down less than cheap stocks have. So, what I've always one of the triggers I've always watched for is, when do they finally shoot the generals? Right? When do they finally shoot the generals? When do the formerly favored stocks go from leading to underperforming? That's something I'm looking for. We haven't seen that yet. We have seen pockets of days where a lot of stocks have outperformed the S&P. I have a couple different working lists. One of my working lists around 180 names. Last Thursday was a really interesting day because the indices were down big. I want to say the S&P was down 2.5 to 3%. And literally 80% of that list was outperforming the S&P. Doesn't mean it was green, but it means 80% of the list was down less than the S&P. So these are things I'm looking for. Like, when does the average stock hold better than the expensive stocks? When does sentiment basically I don't know if you guys saw this. We had a NIMO reading, pretty sure it was a record high, minus 157 intraday last Friday. We're not even close. We're like minus 85 right now. So does sentiment have to retest explosively high, or I guess explosively low numbers? So anyway, these are the kind of signs I'm kind of looking for. Right now, my overall assessment on sentiment versus price versus sort of anxiety level in the markets are that we have a positive divergence. So the question is, does the positive divergence hold? The sentiment figures aren't nearly as low as they were. By the way, the fear greed index, you could pull it up. That's a CNN fear greed. That's finally under 10. Took a while to get there. I think that was 50 2 weeks ago. So that's a good measure. They kind of do a commingled sentiment measure. But anyway, that's the stuff I'm looking for. Does the positive divergence hold? Do sentiment readings hold? Does the average stock finally get to a point where it kind of exhausts itself? Or do we just get to a point where we have really bad corona headlines and the markets aren't down?
That would be a good sign. But they seem to be dominating now. What, you and I have been going back and forth since last Sunday, and Sean was downright bullish on Sunday, and he had some good opportunities on Monday to do it. And then we've kind of gone back and forth with our levels during the week. And, what do you, I hate to put you on a short-term focus here, because I know you long-term perspective, but just from today's session, what would here we are 75 points away from Friday's low. Do you think that if we take out Friday's low and we close below Friday's low, that you could come on this show on Monday and be as positive?
Well, I don't know if I'd be as positive. I might be more. Again, I have to see what, if we're below Friday's low and Apple and Facebook and the cloud stocks are finally having the capitulative move lower, that would actually make me more bullish. If we break the Friday low and kind of the loved stocks are stubbornly outperforming, then yeah, I say we go, we're probably going lower. I think the biggest thing is, when do you get aggressive? That's the key.
I think you're so far from being able to get aggressive.
No, that's what I was just going to say. I think you still have to be, you know, have some ammo. I mean, hey, what the first thing I'll do is if the bulk of my trades, you know, it's kind of like I posted this same thing I think 2-3 days ago. You know, I'm trying to let the trades I put on work, but you know, you can put a stop at cost on stuff. There's nothing wrong with that. So you know, the first thing I would do if I guess if I just think, okay, that we've opened the door to S&P 2550 instead of 2750, right? Then I might just stop at cost and just kind of raise some cash again and kind of wait for the next flush. But I am being pretty opportunistic about trying to kind of catch these chart turns off lows. And by the way, I'll be hawking the 15 and 30-minute charts today just to see, like, hey, is there something out there that's holding? You know, another thing I like to say right now, if a chip stock loses a sale this quarter, it's very, very likely that chip stock is going to get that sale back next quarter. If not next quarter, be 2 quarters from now. The problem is if a restaurant or an airline or a cruise ship loses a sale this quarter, it might, I mean, some percent of those will be rebooked in the future, but I don't think a ton will. So, and in fact, a restaurant, any meal that's not eaten today because people are afraid to go eat in a public place is a meal they're never going to get to resell again in the future. So that's kind of where more so instead of being kind of bullish bearish, I'm always kind of tactical and thinking about, well, hey, even if I'm getting more cautious, where could I put longs? By the way, one of my longs, which I sold the chunk of it too soon, but I still have some, is VIRT, VIRT. Look at that baby. I mean, you know, again, that was a pretty easy call. I was buying VIRT as I was raising cash. I was buying VIRT and saying, look, if there's anybody that's going to benefit from,
Oh yeah, for sure,
you know, hyperactive trading and shaky markets, VIRT. And that's, again, I sold, I was up like 25%. I think I took about 3 quarters of it off.
I sold it too soon too.
I sold it too
some
soon
yesterday.
Yeah.
Or 2 days ago, 21.90. I sold half my position. I still have half of it. Sold half at 21.90. Sold.
Well, you're doing better than me because I sold 3 quarters.
But I think, and then the other one I was talking about was I've got this TDOC, and the only thing, this is a pure coronavirus.
Oh, is that
play.
The teledoc thing?
Yeah, because I don't have to go to the doctor's office. I'm just playing and obviously evaluation makes no sense whatsoever, but just playing it from the fear perspective.
Sure.
Fear trade.
Sean,
But go ahead.
Give us one more pick. You know, that you're hawking.
God, I mean, so here's the other thing. Like the more we go down, the more things enter buy zones for me. But I mean, a name I've talked about plenty of times would be something like, you know, like IIVI. And they're well above their lows. I think they kind of flashed down. I think they hit their low like last Wednesday, by the way, $27-$28, something like that. I mean, you know, that's like I say, that's something I'm just not too worried about. Doesn't mean it can't go back to $28 or whatever. But you know, here's one. Now I need to look at it because I need to see where it was trading. Excuse me, pre-deal. But I just noticed Cypress Semiconductor was down $8 yesterday. So they pulled CFIUS or something. They're questioning whether the deal is going to go through. Well, I remember that deal, and I didn't think 23 was too low, but I was kind of like, why would Cypress sell now? Like it was like, you know, remember I had that big Acacia position, and I'm still frankly pissed that Cisco Systems bought Acacia for $70. Acacia, I don't know if it'd be $100 today, but 2 weeks ago before the market went down, Acacia I think would have been $100 stock. But when Cypress sold, I was like, why are these guys selling? They're arguably going into one of the better cycles they could have in quite some time. So that's something I'm going to look at today. I think it was about 14-15 before the merger agreement. So I'm kind of looking. Oh, here's one more bonus. Something like an ON Semiconductor. This is probably like a boring kind of safe semi. Again, momentum guys were thinking it was the greatest thing in the world at 25. I wouldn't touch it there. But I made a trade on this around 1950, sold it for 21 and change, and it's well below that now. So I kind of think, you know, anything below 19 is a pretty good buy. And, 1650 to 17 is really attractive. And if so like this is something like, I'm going to look at this and I'm not going to buy it and put a stop on it. I'm going to buy it and say, what are 3 levels that I could add into lower, right? Because that's how I basically kind of manage through these things. So, hey, here's the deal. If I hadn't been preaching raise cash, raise cash, raise cash, and hold cash to well higher than normal levels for the last 3 months, I'd probably have a different perspective. I'd probably be shaky and worried about my account and all these kind of things. But I fortunately I have the luxury to have positioned, not perfectly. I mean, hey, theoretically I could have sold more, could have sold 100% of everything. That's not really something I do. So, but if you go into these periods fairly well prepared, it's a lot easier to deal with the consequences coming out the other side. So at the end of the day, I'm still looking to put cash to work. So,
okay. That's what we want to hear from you, Sean. Yep. Good. I'm glad
Sean,
to have you on.
Sean Udall is the CIO of Quantum Trading Strategies. Sean, as always, thanks for the time.
Thank you. And Dennis and I, in 6 months, we will revisit the mortality rate on Corona. By the way, hey, do you ever get down to Arizona? I want to bet a golf round on this.
I hope you're right. I don't want to bet on the mortality rate. I just think it's a lot higher than.
Oh wait, that would be kind of morbid.
I'm saying 1 to 3.
Well,
I'm coming in higher than 1, hoping lower than 3.
I'm on the side of the good, man. I'm going for low. You're going for this high mortality rate. So.
I'm not hoping for that. I'm just reading the tea leaves and saying, who says 3.4? I think they're smarter than me, so that's why I'm skeptical that it's under 1.
Sean, I need a stroke a hole, except for price. Okay.
Well, okay. Let's get her done. Let's get her done.
I can hit the ball 3 1/4. Hey,
let's get her done.
All right. Have a good one, Sean.
Thanks, guys.
I don't know where it goes when I hit it. It goes 3 1/4 that way, or 270 that way.
That's the problem.
I'm always in the fairway. The problem is when I'm on 7, I'm in the 8 fairway, and when I'm on 8, I'm in the 9 fairway.
Yeah, I'm a terrible golfer as well.
All right, we haven't talked Costco today, I don't think.
Yeah, let's talk Costco.
Yeah, the earnings.
Right, they had the earnings after the bell yesterday. Perhaps more important is what they said on the call, just in terms of traffic. The CFO said it's been a pretty crazy time in terms of traffic there. They gave some estimates on that, but their earnings and their sales beat for the prior quarter, and they see a traffic and sales bump because of the virus.
I mean, none of that is surprising. So obviously we see these stores and they're going to get the bump. So again, it's down $4. Is this going to be viewed as the potential coronavirus play? Maybe. I wouldn't short it for that reason. I don't know if I'm going long. Like the teledoc setup yesterday was so nice. That's why I went long that one. But when you're playing off earnings, in the case of Zoom and Costco, it's always unpredictability off an earnings report. So I would say I'd be more inclined to buy the pullback than sell it, but I'm probably not playing it because it could be, these earnings reports can get wild.
Well, we did talk a little. We gave a little rant about how technical analysis doesn't work. Well, it worked yesterday in Costco.
Right to that high. And you know what? Technical analysis, we're not saying it doesn't work.
Right,
we're just saying it's one tool in the toolbox.
It
works nice for the levels. Like that's what I do too. When I'm in a stock for a fundamental reason, I look, okay, well, what's the next level? What can it get to? Just like Teladoc, I was saying, I think it's got the potential to test that high at 148. Am I going to lighten up there? Maybe. If it takes it out, maybe it's a different case. So the technicals can still be used. Just don't totally fully rely on just them in your experience here. Because if you're just reading technicals and not reading headlines, I mean, you could get hit really hard in the case, that they were saying it's been, how many people on CNBC have popped on CNBC in the last week or 2 weeks, or especially in the last week, every money manager comes on and says, oh, it's a great buying opportunity because they're all biased. They're all long only. And they've got an obligation to calm their investors and to talk bullish. But, when you talk about technical analysis, there's been a lot of people who have been using charts and saying, oh, these charts are setting up well. I think the low is in. But then if you look and you're just saying, well, think about, where we're going and use some logic here. There's probably some more fear to come. Once they start testing, there's going to be more cases. How is the market going to respond to that? That's why, I'm able to position myself more to the short side of my trading because I'm reading not only the charts, but I'm also reading the potential of the headlines, the logic behind it. Logic can work in these markets.
All right. As we wrap things up, first I wanna thank everybody in the YouTube chat and the pre-market prep chat for your contributions. This has been a long week, and
Very.
It's been a long 2 weeks.
and I was in a lot of it. Dennis, last Friday, man, these guys were about ready to like send me like a Christmas present or something early because I was pretty down. Dennis, thanks for coming back. Thanks for giving your
coming back.
yeah.
Thanks for surviving the plane
Yeah.
ride.
Coming back.
Your perspective on the markets. I didn't think I could take any more FaceTiming with you from Jamaica. But let's close above 29.51, folks. I mean, that's my bogey. I can give you a lot of numbers and a lot of things. That was Friday's close. We rallied what 150, 160 points off that. Let's close above there today. I think that would be a positive sign for the markets. And then, boom, yeah.
If we take out those lows,
yeah, Friday's low. We
Katie bar the
may not have
door.
to go on Monday. That's what I have.
We're
to
gonna test. I think we're gonna test it today. Do you
say.
think there's a possibility?
Oh, there's
not
yeah.
for sure, but there's a distinct possibility this could get tested today. I mean, yes, we're still 80 handles away from it, but the way this market moves, don't kid yourself. There's an outside chance that could get tested today, and it would be critical for that to hold. I think it's gonna be a lot of people nervous holding into the weekend.
Sure.
So it's hard to say. There could be some people short this market, but I don't think there's a lot. I think there's more people who are like maybe going to be nervous about the news flow through the weekend. So it's kind of predictable that I don't think we rally it back to, not that it's fully predictable. This market is unpredictable, if anything. I mean, the Fed could come out and lower rates here again just out of the blue. There's a lot of things that could happen. A vaccine. There's a lot of things that could potentially happen. But if you just take it and just use the logic here, I think people are probably going to be nervous to hold in the weekend, which is why I don't think we're going to close green today. I don't think we're coming back. Like, I don't think this is going to be buy it right now. We're going to just rip it, rally higher. Maybe on Monday, but if the news flow isn't bad, but there's too much potential for bad news flow over the weekend, I think people are going to be nervous holding into the weekend.
I think that there's also people out there that said, you know what, I'm just, that want to buy and just like, you know what, I'm just going to let this week feather out.
Oh, they're doing that now.
Yep. And okay, here we are. And I wonder where we were trading at when we finished the show last Friday. So I'm hoping there's some underneath demand here. But
the CME FedWatch tool, which is based on the Fed funds futures, has a 65% chance of a 3/4 point rate cut in March.
3/4?
Yeah.
Where does that take us to?
You heard me right.
0.
That takes us to a quarter to 25 to 50%. 0.25 to 0.5%.
Are they going negative? Are we going to negative rates?
That would take us.
I saw someone tweet out negative rates. That means you can buy a house and then sit in the house and get paid to be in the house.
That sounds pretty good.
Yeah.
All right. Let's wrap it up here.
Housing bubble.
Yeah. Oh, we should hope.
We don't need no more bubbles.
No.
No more bubbles.
Like Joel said, thanks to everyone in our chats. Both of them. It's been a very, very interesting few weeks here. Thanks to our guest, Sean Udall. You can always replay our show on YouTube or catch the podcast version on whatever podcast platform you prefer. You can always email us as well, premarket@benzinga.com. Give us a call, leave us a voicemail, 734-494-0246. Please remember, all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Everyone, have a great day. Have a great weekend. Don't forget about the daylight savings, and we'll be back with you on Monday.